Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day video. It is September 12th. We are going to take a look at Oracle. This is out of the information technology sector. Let's jump right in. If you want to know more about this company, check them out at www.oracle.com. That is www.oracl.com, www.oracle.com. That is their homepage where I pulled this information from. So they started back in 1977, birth of a Silicon Valley startup. Engineers Larry Ellison, Bob Miner, and Ed Oates found software development laboratories. Their first office is in 900 square feet in Santa Clara, California, and that's what they really do. They are a software company, world's largest database management company. They were named in 1987, right, with US 100 million in sales and 4,500 end users in 55 countries, so they're obviously worldwide. Oracle acquires PeopleSoft in 2005. This is an HR leader in HR and ERP apps. So this is HR software. My company uses Oracle and PeopleSoft as their part of their HR package. In 2013, Oracle database plugs into the cloud. So this is whenever they started providing their cloud-based services. And a lot of companies have this cloud-based service that they offer now. I think Apple has it, Microsoft, all of the big dogs have this cloud base where you can get more storage in the cloud. Jumping over to 2018, CERN explores inner workings of the universe. Scientific Research Center is using 10,000 Oracle Cloud cores to perform physics and analysis. So you can kind of see here where they have their hands. They have their hands in a lot of different industries and education, medical, manufacturing, construction, you name it. They even have their own racing team that uses their technology to help with their racing software. So they have their hands in pretty much everything. Any computer out there, I'm sure, is running some form of Oracle products. 2019 Barcelona biotech fight. Here's another one right in the medical field. Barcelona biotech fights heart disease. ELEM computes full heart models of diseased hearts using Oracle's high performance cloud. So again, big in the cloud space. And this brings us up to 2022. Oracle buys EHR pioneer Cerner. Acquisition fits into broader mission, build and deploy integrated, mostly automated healthcare information systems and processes. So again, they're in HR space, space exploration. This one here into automated healthcare, right? The Barcelona biotech. So they have their hands in a lot of different industries, and a lot of different companies are using their technology. Overall, they are a technology company, and they're doing a lot more of this right here, where they're acquiring companies now that they are a larger firm, which usually is what larger firms do. Let's keep on going. Now, the reason we are taking a look at them, they were down 13.49%, huge drop on the day. This is a huge drop for any company on any day. This would be a huge drop over a year, let alone over a single day. We are talking about Oracle Corporation, ticker ORCL, closed out the day at $109.62, down $17.09. Again, big drop, 13.49% in the negative. 52-week range as low as $60.78, as high as $127.54. So even with the big drop today, they are still closer to their 52-week high than they are their 52-week low. Average volume of 10 billion. Today's was 66, and just a sell-off, right? I know it doesn't look like it, but a sell-off throughout the day. Market cap of $297.537 billion, so they are a large cap company. Beta of 0.99 makes them just a hair less volatile than the overall market. Price to earnings PE ratio on this one, $35.70 per share. A little high for my taste on this one. EPS, earnings per share, $3.07 per share. A little lower than I would think a company like this would be, but it is what it is. Earnings date December 12th through December 16th. So somewhere in there, you'd see the next one. They may have had an earnings date here today. That may be why you saw the big drop. I'd have to look at what other news, what is the reason, the driver behind this drop. There's got to be something out there. If you know, drop a comment down in the comment section below. Let me know if there was any negative news on Oracle. I'll have to do a little bit of a deeper dive on this one to see what the big drop is. A company this size, well known as this, there's got to be some negative catalyst here. For dividend, $1.60 paid out on the year. They are quarterly payer. Low dividend yield on this one. 1.27%, at least where it currently sits. If you could get them back here closer to that $60.78 low here, that may put them close to 2%. I don't know if it gets you all the way there, but this one is a little lower than what I look for. But let's see if they're growing. We'll see that here in a little bit. Ex-dividend date was July 11th. Looks like they paid out on July 26th, so they should have another dividend coming up here soon. I would be surprised if there wasn't another ex-dividend date announced. I'm actually surprised there's not one more recent than that. This is a couple months old now. So look for that coming up. If you're a dividend holder, let me know when the ex-dividend date on this one, the next ex-dividend date is, if you know, down below in the comment section. Now, I like to look at statistics. We're going to look at dividend yield theory to see if this one's potentially undervalued. To do that, we go into statistics. We go down to dividends and splits. We look at their 5-year dividend yield average of 1.55%. We compare it to their current 1.27, or over here, forward annual dividend yield, same number, 1.27. And since this number is lower, it speaks to potential overvaluation on this one. So if this number was higher than the 1.55 5-year average, that would speak to undervaluation. But currently, Oracle is potentially overvalued, at least according to dividend yield theory. They do have a low payout ratio. I like 75% or less. This is 44.3%. So very low payout ratio. They have plenty of room to continue to grow this dividend over time. Now, you want to look at the financials. You want to see the revenue of the company, make sure it's growing. You want to see that they are making a profit. They have more assets over liabilities. A lot of good information here. You can see their balance sheet, their income statement under the financials tab. We like to look at free cash flow and make sure it's growing. We want growing dividends. So we want growing free cash flow because that is what dividends are paid out of. They can also use it to make acquisitions, pay down debt, repurchase shares. There's several things that they can do with free cash flow. But in this instance, we're going to look for growing free cash flow so that we can have growing dividends over time. 2020, $11.5 billion here. 2021, $13.7. So nice growth from 2020 to 2021. Now, as we saw in 2022, they had a big acquisition, which accounts for this big drop here. So decrease from 2020 to 2022, $5 billion. But then it looks like here, as of what they've reported so far this year in 2023, they're back up to $8.4 billion. So this right here, again, as I said, if you remember on the previous page, they made a big acquisition in 2022. So a lot of their free cash flow went to that acquisition. But another one that I always like to point out here, look at the repurchases of their own shares. 2020, $19.9 billion, 2021, $21.6 billion. Even with the big acquisition in 2022, they still bought back $17.3 billion of their own shares. So far in 2023, they've bought $2.5 billion of their own shares. So they are actively making acquisitions, increasing their free cash flow, and buying back shares, which is nice to see. It makes you more of an owner of the stock, even if you don't continue to add. So the numbers look good on this one overall, except for the low dividend yield. This is much lower than I usually go for. We'll have to see what their dividend growth rate is here in a little bit. I would love them to pull back more towards this $60, $60.78 52-week low here and try to get that closer to 2%. Overall, the numbers look good other than the valuation. I think this needs to pull back significantly more, maybe under 70 at least for me to be interested. It's still a little high, even with the 13.49% drop on the day. Let's continue. Now, I always recommend more than one source. So another one that I like is stockanalysis.com. What we saw before on the previous page was Yahoo Finance. And they have 22 stock analysts that have taken a look at this. They call it a consensus buy. I do not agree with this. I would call this one a hold. I would be looking for more of a pullback on this one. They do have a low estimate of $72. If it was to drop back into the 72 range, I might be interested in it. And that would be a 34.65% decrease from where it currently sits. They have an average estimate of $125.86. That would be a 14.23% increase from where it currently sits. And if it happened to hit their high of $150 estimate, that would be a 36.14% increase in the stock price. All the while, you could collect that 1.6% dividend yield, at least if you were to buy them now. Now, I like to go into statistics on this one and look at return on invested capital and return on equity. ROE, return on equity, sitting at 213.3%. Very, very high return on equity. I look for 10% or better, so this one is smoking that, and that's probably some of those acquisitions showing here. Now, return on invested capital, 4.19%, and the opposite is true here. Because they made that recent acquisition, they would not have a big return on that investment, and it would drive down this number here. I usually look for 10% or better here as well. 4.19% is lower than what I like, but with that recent acquisition, I'd have to take that with a grain of salt and see what their projected earnings are going to be on that one and how much their investment will pay off in the future. I typically like to look for earnings per share growth of 5% or better over the next 5 years. They do not have an estimate here, so I would have to look at another source. If you have a source that shows EPS forecasted growth for Oracle, go ahead and drop that in the comment section down below. Help us out on this one. Does project revenue growth over the next 5 years at 10%. So very nice to see there. Now let's look at the dividend. Again, payout ratio is under 50%. I look for 75% or less. This smokes that number, 47.62. Lots of room to continue that growth. And they do have high dividend growth, 12.5%. Let's look at 2020, July 14th, they were paying out 24 cents. Looks like they jumped that up on April 7th of 2021 to 32 cents. Jumped it up again. They rode out all of 2021, actually all of 2022, so they didn't raise their dividend. They haven't raised it in 2021 or 2020. Well, 2021 they did. They raised it up, but nothing in 2022. So it looks like they held it steady in 2022, and then recently in April 10th of 2023 raised it up to 40 cents. So that would account for that 12.5%. So I don't like that they froze it here in 2022. I'd like to know what's going on there, but that's a big stretch where they did not raise the dividend at all. So that's something to note. This is the vested interest stock screener. Go ahead and pause this and run through this at your leisure. This is how I set up the videos. It's also how I look at a company and see if I am interested at all. It has to meet 5 of 8 to be investable. If it's a financial company, I throw in this price to book. And the last one, it must meet 6 of 9. And that is Oracle. Big drop on the day. Must have been some sort of negative catalyst. I'm assuming they must have had an earnings report or some negative news around them happen today. Huge drop on the day. I would say this one is a little overvalued still. I would love it to drop back into the 70 range, 75 or under. Even under that, back in the 60s would be really nice. If you were buying this back, a while back at the 52-week low in the 60s, kudos to you. You've made a nice return on this one. But it is not one I'm interested in at the current prices, even though I think the company and the business model is set to continue to grow over time. These are sticky software that companies usually get into, and it's hard for them to get out of, and they typically grow over time, right? So interesting company, just not one I'm interested in at the current valuation. Let me know what you think down below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us here in the vested interest community. Join us on this journey to financial freedom, building a community of like-minded dividend growth investors so we can share our experiences, stocks like this that we are watching, stocks we're avoiding, tips and tricks that we may have learned along the way. Go ahead and drop them down in the comment section below. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a stock you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down below and I'll work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion in investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.